Greetly dear traders, and you're watching the daily market review with me, financial analyst of Grand Capital Company, Sergey Ilyin. So, our daily heading is dedicated, as traditional, to technical analysis of some forex majors. And let's start. So, first major pair will be Euro and US dollar. So, resistance at 1.2909 will be called into action, as the January 13 bearish outside day high at 1.2879 comes under pressure. Looming just above 1.2909 is projected resistance at 1.2962, which will look to defend the 1.30 level. Weakness will attract support, while above 1.2805 and only below 1.2750 would spark a deeper setback towards 1.2711 and 1.2689. And weekly chart of Euro and US dollar trend is according to technical analysis bearish. Intraday analysis of USD dollar versus Japanese yen. So the near term here tone remains USD positive, while projected support at 76.68 holds. Keeping 76.68 intact maintains the jockey rally of Tuesday 76.55 low, threatening to extend above 76.88 towards targets at 76.92 and 76.95. Loss of 76.68 would put US dollar bears in control, exposing the 76.55 low. Weekly chart of US dollar versus Japanese yen trend is range. Intraday analysis of Great Britain pound versus US dollar. What I have here, dear traders? So the points 1.55 resistance area is now in the focus. However, following Wednesday's push and close above 1.5408, the rally of the January 3rd reaction low at 1.5235 creates room for gains up to the 1.5595 area, which provides a limit for the corrective short-term uptrend. But support at 1.5346 will look to contain weakness, and only below 1.5321 would leave the 1.3235 low vulnerable. Weekly chart of Great Britain pound versus US dollar trend is bearish. Intraday analysis of US dollar versus Swiss franc. So, scope for more downside to 0.9304 has been created by Wednesday's close below 0.9407. The 0.9304 termination low of a bull pennant continuation pattern on the daily chart is an important high low, and the break below there would strengthen the January 9 direction high at 0.9595. A 1.618 Fibonacci downtrend extension target lies at 0.9266, and only recovery above 0.9463 would leave the tone opening the 0.9525. Weekly chart of US dollar versus Swiss franc is range. Next pair and last pair will be intraday analysis of Australian dollar versus US dollar. So the corrective Australian dollar bear wave of Tuesday's 1.0452 and high as has scope to extend to the 1.0330 area. However, the important support level at 1.03 will remain secure, and dominant Australian dollar bulls are expected to limit the consolidation to 1.0330. A return to this week's 1.0452 high as the remaining threat, challenging a 2-month bear resistance line at and threatening an uptrend extension towards 1.0579. So, the weekly chart of Australian dollar versus US dollar trend is bullish, still bullish. Okay, so dear traders, that's all for today. Thank you for attention. I wish you the good luck, a lot of luck. I know it will be useful during traders, and this week it will be very useful. So, for additional information, you can visit our website www.grandcapital.net. It was me, financial analyst of Grand Capital, Sergey Lin. I wish you the fair trends. Goodbye.